Okay, I believe I have confirmation that the screen is visible and we are good to go. So with that, it seems like the right time to get started. I would like to pass on the mic to Gahal to get the webinar started on behalf of Strathallan.
Good afternoon, everyone, and thank you, Waleed. My name is Carl O'Connor, and I am the CEO of Strathallan, and I would like to welcome you all to this webinar. Before we get into the presentation, I would like to make a couple of remarks. Firstly, we hope that you, your employees and families are safe and healthy. We are in daily contact with you, our tenants, and can understand the difficult environment you are experiencing. For those of our tenants who are open and providing essential services, a big thank you. You are helping us all get by in a very difficult time. For those of our tenants who are closed, we understand the difficult time you are having, including the considerable financial pain. We are also impacted by this crisis at Strathallan and are trying our best to adapt. We have seen our rent collections fall, but continue to have considerable expenses to pay, including taxes, insurance, utilities, and of course, mortgage principal and interest. We all have our part to play in helping each other get through this crisis. Government, banks, insurance companies, tenants, and landlords have all a part to play. For those of our tenants that need rental help and deferrals, please reach out to us. We will try our best to help. However, we do not have unlimited resources. And that's now back to the webcast. As I said earlier, government and banks and insurance companies have also a part to play in this crisis. This is why we're offering this webinar. Let me hand the discussion over to Peter Kafka, our VP of Leasing, to moderate the session.
Thank you for your introduction, Carl. Good afternoon. Thank you everyone for dialing in. The purpose of this webinar is to help you, our tenants. We want to help you understand what you can do to keep your businesses alive during these difficult times. As you know, Strathallan has introduced its own rent deferral program. By now, you should have received letters about this program from the individual property managers. If you have not received the rent deferral information package, please contact your respective property managers. I want you to know that as your landlord, we are trying to help you as much as we can because we want you to survive this crisis. The retail landscape is exciting and colorful, and no disrespect, but it is not because of the big box stores. It is because of your independent stores and restaurants. So to put our money where our mouth is, in addition to our rent deferral program, we wanted to do something that no other landlord has done so far, at least, and that is to offer this webinar. We're doing this because we recognize it may be overwhelming and confusing to keep track of all the government announcements. For this reason, we wanted you to hear from the industry experts and have them clarify for you how you can benefit from the available assistance programs. So please listen carefully, grab pen and paper, and most importantly, act on the basis of the tips you'll receive here. Without further ado, let me introduce our three panelists. We have the great pleasure to have Aman Datu, a Senior Manager at KPMG Canada, here with us. And Aman will talk to you about the wage subsidy programs and the revised tax filing deadlines legislated by the federal government. We will also hear from Chris Bauer of Royal Bank of Canada. Chris will explain to us what financial assistance is available to small businesses through the federal government and what other relief measures are offered by Royal Bank per se. Last but not least, we'll have Jeffrey Charles of Gallagher Insurance Limited, and he will be helping us understand what you as tenants should be asking your insurance providers during and after the pandemic event. Now, let me turn the virtual microphone over to Aman of KPMG. Aman, please tell us more about the different types of wage subsidy programs that there are available.
Sure, certainly, Peter. Thank you. So in response to the COVID-19 pandemic, our government has been quite active in announcing various tax relief measures intended to support both individuals and businesses. So that said, as Peter had mentioned, my discussion today is going to focus on three areas primarily: the Canada Emergency Wage Subsidy. I'm also going to discuss the temporary wage subsidy, and then I'll conclude by discussing the various extended tax filing deadlines and tax remittance deadlines. Okay, so the Canada Emergency Wage Subsidy, what is it exactly? Well, it's a temporary 12-week subsidy provided to eligible employers to assist them in retaining or rehiring employees that were previously laid off. Now, the amount of the subsidy provided is generally equal to 75% of remuneration paid to employees during the eligible period, up to a maximum subsidy of $847 per week per employee. So the total 12-week eligible period is retroactive from March 15th, 2020 to June the 6th. So the subsidy is for remuneration paid to employees during this period, and it's broken out into three separate periods. Period 1 being March 15th to April 11th, period 2 being April 12th to May 9th, and then period 3 being May 10th to June 6th. So who's eligible for this subsidy? Well, it's individuals, taxable corporations, partnerships consisting of eligible members, nonprofit organizations, and registered charities. So just to note here, certain public bodies are not eligible for this subsidy. So for instance, hospitals, schools, local governments will not be receiving this subsidy. So in order to receive this subsidy, you must show a decrease in revenue of at least 15% in March and 30% in the following months. And I'll get into this in greater detail shortly. Also, to be eligible for the subsidy, the remuneration must be paid to eligible employees. So an eligible employee is an individual who is employed in Canada and who has not been without remuneration for 14 or more consecutive days in any one of the three eligibility periods I mentioned earlier. So allow me to illustrate this. Let's say an eligible employer has paid an employee for the entire week beginning on March the 15th, but then laid that employee off immediately after that week had ended. If that's the case, the 1 week of remuneration paid to that employee would not be eligible for the subsidy because during that period, period 1 in my example, the employee has been without remuneration for 14 or more consecutive days. Okay, so moving on, how do we determine the reduction in revenue requirement, which is a crucial criterion which must be met in order to receive the subsidy? So employers are given a little bit of choice here. They can choose to compute the reduction in one of two ways. One being they can look at the year-over-year change in revenue. So for example, if the employer is trying to determine if they suffered a reduction in revenue of 15% in March, they can look to see what the revenues were in March 2019 to determine that. Or they can compute the average revenue earned in January and February 2020 and use that as a benchmark to determine the reduction in March and so on and so forth. Okay, important thing to note here, however, is whatever method is chosen, that method has to be employed consistently for the duration of the program. Okay, you can't flip-flop between the two options. So a great thing about this program is that once an employer is eligible and thus has shown the required decrease in revenue for a specific eligibility period, that employer automatically qualifies for the next period. So for clarity, if an employer determined a reduction in revenue of at least 15% in March, they would automatically be eligible for the subsidy on remuneration paid in period 2 also. Okay, so then to get the subsidy for remuneration paid in period 3, they would either have to show a reduction in revenue of 30% in April or in May. Okay, so there's a bit of a choice there. Okay, so how do we go about computing the revenues for purposes of the subsidy? Well, the legislation comments on the fact that the computation has to be consistent with the employer's normal accounting method. Revenues from extraordinary items or amounts on account of capital are excluded from the computation. That said, employers are given the option to calculate revenues on a cash basis, which may be beneficial in helping to meet these revenue reduction tests. That said, again, if you do choose to compute revenues on a cash basis, then you must use this approach for the duration of the program. Again, for example, you wouldn't be able to compute revenues on a cash basis for one period and then use the accrual for the next period. And eligible revenues are generally from arm's length sources, but that said, the legislation does allow for the consideration of revenues from certain non-arm's length transactions, such as where an employer sells all of its output, to a related company, that in turn, that related company earns its revenue from arm's length sources. Okay, so finally, how is the subsidy received? Well, eligible employers must file a prescribed form with the CRA before October, which will be available online through the CRA's My Business Account portal, which is actually opening up this Monday, April the 27th. This form can also be filed through a dedicated online portal, but that online portal won't be available on Monday. It'll be available in the coming days or weeks. And I've also included a calculator here that the CRA has on their website that will actually calculate the subsidy based on information that you have to input. So I'd encourage everybody, to check that out and kind of get a real good feeling of how the computation works. Okay, so now we're going to switch over to the temporary wage subsidy. So what's a temporary wage subsidy? Well, it's a 3-month program that will allow employers to reduce payroll deductions that are required to be remitted to the CRA. The amount of the subsidy provided is equal to 10% of remuneration paid during the period March 18th to June 19th, up to $1,375 for each eligible employee. And again, similar to the 75% wage subsidy, an eligible employee is defined as being an individual employed in Canada. The max subsidy, however, that can be awarded is further limited to $25,000 per employer. So if I were to compare this to the 75% subsidy that we just discussed, there's no aggregate maximum for an eligible employer under that program. I mean, there is a weekly maximum of $847 per week per employee that subsidy will apply to, but there's no maximum such that there's no specified number of employees that subsidy is available to. Okay, so who's eligible? Well, again, it's employers, can be individuals, partnerships, nonprofit organizations, registered charities, Canadian-controlled private corporations eligible only for the small business deduction. So this is another key distinction from the 75% subsidy, as a 75% program is not limited to CCPCs who claim the SBD only. It's open to all taxable Canadian corporations who may not be eligible to claim the SBD. So we're talking about maybe larger businesses here. In addition, the employer must have an existing business number and payroll program account with the CRA on March 18, 2020, and remuneration that qualifies for the subsidy is salaries, wages, bonuses, and other types of remuneration. Okay, and finally, how can you apply for the subsidy? Well, unlike the 75% subsidy, there's no actual application required. It is incumbent on the employer themselves to compute their own subsidy and then reduce the current payroll remittance of tax themselves. Key thing to note here is that employers cannot reduce their remittances of CPP and EI. This only pertains to remittances associated with income taxes withheld. So that being said, what if you're in a situation where you've calculated your subsidy and it's in excess of the income tax withheld from your employee's wages? Well, that excess portion can be carried forward and applied to future periods under this program. Okay, so revised tax filing deadlines. So the CRA has extended, various tax filing and tax payment deadlines to address cash flow concerns that many are facing due to COVID-19. And these extensions are free from any interest or penalties charges. So individuals have, till June 1st to file their personal tax returns. Historically, it's been April 30th. And any final taxes owing by individuals has been extended till September 1st, where again, it would have otherwise been April 30th. Self-employed individuals, the filing deadline has remained unchanged at June 15th. But if there's any taxes owing, that's been extended to September 1st. Corporations, they've had an extended filing deadline to June 1st, and that's for any filings that otherwise would have been due on March 18th or before June 1st. And any taxes owing that otherwise would have been owing on or after March 18th and before September 1st, 2020 have been extended to September 1st, 2020. And our 4 returns, those are non-resident returns. Again, their filing deadline has been extended to May 1st. Previously, it was March 31st. Certain partnership returns that historically would have had a March 31st filing have been extended to May 1st. And generally, other information returns, elections, special designations that can be made that were due after March 18th, but before June, have been extended to June the 1st. Okay, so additionally, GST, HST remittances have also been extended to June the 30th for monthly filers for GST, HST collected for February, March, and April 2020 reporting periods. For quarterly filers, GST, HST collected for January 1 to March 31st reporting periods. And for annual filers, new installments are due in March, April, or May 2020 in relation to remittances collected and owing for both the previous and current fiscal years. Okay, so that concludes my talk on this webinar. But before I hand it over to the next speaker, I just want to say, in particular to the 75% subsidy I spoke about, the computation to determine whether employers have met the required revenue reduction tests, or even determining what actually qualifies as eligible remuneration, can get quite technical and involved. So that said, I want to encourage you to have meaningful conversations with your advisors and seek their help in determining if you do qualify and what the actual amount of the subsidy will look like. Okay, the CRA has made it clear that there will be significant repercussions for those who are seen as to try to manipulate the system or were negligent in performing their calculations. So the point I'm trying to make here is accuracy is key. So again, make sure you're having those discussions with your advisors. I mean, that's what they're there for. And that's it for me. I hope you guys all found that informative.
Thank you so much, Aman. That's great information. If I may say something for the remaining panelists, if you guys can please speak a little bit louder. I know some of the words may get lost. So going forward, if you guys can please speak up. We'll now have Chris Bauer of Royal Bank of Canada speak to you about different types of financial relief measures available either from the government or from the banks. Chris,
Great.
Please.
Thank you so much, Peter, and thank you to Strathallan for the opportunity to speak today. And before we get started into this, it just, I think we've all heard how important small businesses are to the economy. I know we've heard this time and time again, and I think the crisis has certainly underscored that fact. I wanted to start just by commending everyone on the line today, every small business owner, just for the bravery that you've shown through this period. You are the lifeblood of this country. I just want to say thank you for that. I carry the responsibility to ensure the teams that I lead for RBC across Toronto and the Greater Toronto area, they just provide the best support possible to you. I know that not everyone here deals with RBC, and I completely, understand that. Just know that we are working, as is your banker, tirelessly to help administer the many government programs that have and will be launching. And so for my presentation today, I'll be addressing 3 areas of interest that I think you'll find interesting. Number one is that immediate relief program that all of the banks had initiated. The second piece will be a couple of government programs that I think would be key for you as a market segment. And then finally, really about thinking about the future, what's the right approach for you and for your business. So on the screen right now, you see what we talk about as the immediate relief program. And all of the banks essentially took very similar approaches to immediate relief. They looked at business loan payment deferrals, for instance, deferring payments up to 6 months, increasing operating limits on some of your revolving credit lines where it made sense to help out, waiving some setup fees for perhaps new enrollments of digital enablement, cash management solutions for your companies, how you pay and how you receive money. Including, waiving stop payment fees or ATM fees for certain statements, just to keep you updated and connected with your finances. You also saw some enhanced online banking options as well, including self-serve deferral options. So if you've logged into your systems, you may have seen a whole bunch of banners within your online banking or other cash management systems that offered you various options for relief, as long as it was right for you. And then there are also direct deposit and eligible CRA payments that were also embedded and worked into many of these systems. And so that was essentially the immediate relief efforts that all of the banks took. If we go to the next slide, we'll talk about some of the government programs that had been launched, and in particular, one that is likely the most key for our market segment that we're talking about today, which is the Canada Emergency Business Account, or CEBA. You may have heard quite a bit about CEBA over the last little while. And essentially what that is, it's a $40,000 financing, which would cover short-term expenses, be it payroll or other business expenses. To qualify, this is government criteria, to qualify, you would have had to have payroll expenses in 2019, as per your T4 summary, of between $20,000 and $1.5 million. So that is your business's payroll expense. You would apply through the bank that you had been dealing with and that you had an account with prior to March 1st, 2020. So for whatever bank that you had chosen and that you were dealing with prior to March 1st, that would be the bank that you would apply through. There'd be no default on credit facilities in the 90-day period prior to March 1st to make sure that this was applicable to individuals who are still a going concern. And just some of the features of this particular program, and they're quite interesting. Until December 31st, 2020, this particular account will be funded as a revolving line of credit. So you can draw from it or pay back as you need for your business, up to $40,000. It would be interest-free until January 1st, 2023. Now, after December 31st, 2020, any outstanding balance that you would have drawn from this line of credit would be converted into a non-revolving, meaning you'd have to start paying it back, 5-year term loan, which would mature in a 5-year period of time, which is December 31st, 2025. At which time the balance would have to be paid in full. Now, starting January 1st, 2023, which is essentially the end of that interest-free period that I just mentioned, your interest would start to accrue on any balances that would remain on this term loan at a rate of 5% per year, which would be payable monthly on the last day of each month. Here is the very key point for this particular program and what makes it very, very popular. If you, as the client or as the borrower, paid back 3/4 of whatever balance you drew from that term loan as of January 1st, 2021, so that would be the balance that you've drawn by that period of time, and you would have paid 3/4 of that back on or before December 31st, 2022, the remaining balance of that entire term loan would be forgiven. So if we think about it, if $40,000 was fully drawn and you had repaid 3/4 of that by that period of time, then you would have received $10,000 forgiven, and that would be the maximum under this program. Let's go to the next slide, please. So this program is launching May 4th, and we just received updated information today on it. But essentially, it's the Business Development Bank of Canada, which is the government's bank, essentially, and co-lending facilities with all the Canadian banks out there. And essentially, it's an 80-20 split. So this type of program you'll be hearing more and more about. And what it is, it's a government-backed loan that will have longer amortization periods made available to you. The term loan will assist to cover expenses which are essentially critical to your continuity, such as rent, payroll, other operational costs. It'll be the co-lending facility, as I had mentioned, between the government and your financial institution. And the one key piece here, and the real difference between this particular program and the CEBA program that I just spoke of, is that you really do have to qualify for this particular loan. You would really have to look to see whether or not your company should take on additional debt. And it would really have to be considered against the backdrop of a deep review of your business's operations. And I think that is a good segue into the next slide. which is essentially that of, our role as strategic advisors. So I know at RBC, the key component of this is really helping guide you through this time, not just through this time, but ultimately through business as usual as well. And the key component of that is understanding your business and understanding the constituent components of that. And you would have to see, at this period of time, a lot of businesses, and this is what we recommend to each and every one of our clients, is to review your business model, right? Understand its applicability in a post-COVID economy. Are you going to be relevant with your existing business plan as is, or do you need to shift? Do you need to make some changes? We would help you understand your cash flows, for instance, and we would plan your business needs around that. We would help review your expenses, as well as managing your capital, keeping some perhaps aside for future investment once things do ramp up a little bit. And the final piece here is really connecting you with personal experts, right? Because there is such a connection between your day-to-day life as individuals, as people, and your business. And those lines are often blurred. So by only looking at your business component, sometimes you miss out on something that is really relevant on the personal side of things as well as other government programs that might be available to be leveraged on that front. So we would help you look at that. And with that, I will thank you again for your time, and I will pass it on to the next speaker.
Thank you so much, Chris. Liquidity is everything in these times, so appreciate your insights. Jeffrey, thank you for breaking up your house arrest and joining us on this not so sunny Friday afternoon. Can you please share with our audience what they need to keep in mind when talking to their insurance providers?
Yes, thank you, Peter. I'll start with saying I tried to get the folks in the marketing department to widen the distance between these two people. They seem a little close for our time. I'll try and be somewhat light because I appreciate the circumstances everybody may be facing, and I want to just reiterate that we feel you, we understand what you're going through, and we're sorry that you're having to deal with it. And I'm going to try and provide a little bit of guidance. It's you'll appreciate challenging to do at an individual level, but I'll try and speak in general terms. And should we be in a position to be helpful to anybody, we would be pleased to do so. Wally, maybe we'll just, thanks, bud. So we're going to take you, I'll just explain who Jen and I are really quickly. We'll talk about some of the items that are top of mind, and then we'll wrap. So my colleague Jen and I work for Gallagher. We are a insurance broking business that is global, but Waleed, if you can show us the next one. We are, I want to reiterate and maybe start for all of you who are on the phone or who are watching today that we're right across Canada, a lot like Strathallan, and we work with businesses that are like yours every day and all day. So we understand some of the things that you're facing, and I wanted to show some of that relatability to all of you. We get it. The first thing that I think we'd like to talk to you about is seeking clarity. Every single insurance policy, a little bit like a thumbprint or fingerprint or a snowflake, should be unique, and it should be unique to your business. And so I hope that this isn't a frustrating statement for you, but we would strongly encourage you to have a unique conversation with your advisor to understand what your policy actually says. There are differences, there are uniquenesses, and there are certain things that may be available to you. There are going to be things that are not available to you, but what we think is valuable at this time is to understand with clarity what is there. And I would argue that this is proving to be challenging in our industry. There is a lack of clarity, we think, that is circling around. And so we think finding that clarity is going to be valuable to you. And if we can play a part in helping, we want to. So I think Waleed might be making us available should you wish to have a specific or personal conversation. That being said, I want to talk really briefly about business interruption. Business interruption is the topic at the moment about insurance. We understand that there is some frustration about the indicated and early response around the business interruption insurance, but for those that have not received advice or any clarity at this point, I will try to describe the challenge at the current moment. The challenge at the current moment is that majority, let me be clear and say that again, majority, but not all, majority of property policies, which is where the business interruption cover exists in an insurance policy, requires that property damage or physical loss have occurred. And in many circumstances, it's being suggested by the insurance community that property damage has not occurred. And we believe that it's important for you to have clarity in your own circumstance as to whether or not there has been property damage, and get a response or an understanding from your advisor or your insurer directly. The other thing that we think is important to consider when evaluating your own policy is to understand exclusions or potential extensions of cover. There may be sublimited cover clauses that provide access to certain response, and there could be specific exclusionary language in your policy that helps bring the clarity that I reference. But the surmising comment we have is that right now is the time to be communicating. Communicate your circumstances, communicate the business that you have lost. You will appreciate that if someone is going to help you advise or advise you in the calculation of what your business interruption loss may in fact look like, so that if you needed to articulate that to insurers, we think it's important to investigate what your business interruption worksheets might reflect, an actual calculation of the losses that you are experiencing. These are all things that can be addressed and prepared as you consider this. And we would also suggest that going through the process to speak with your advisors about whether or not coverage exists would be beneficial to you in understanding some of the next steps that you may be taking with your business. Thanks, Waleed. There are three other considerations that I think we want to touch on today, and then I've got Jen, who's going to provide you with some feedback on some of the preventative measures that you can take at your physical locations to prevent potential losses and help your business. I want to talk about two other things that are also circulating in our community and in the insurance conversation today. The first is related to vacancy clauses. Many, not all, but many insurance policies contain a provision around vacancy that would effectively cease coverage if vacancy or a lack of attendance to site is continued for a defined period of time. This is, as you'll probably appreciate, potentially problematic, that your ongoing coverage in the event that there were physical losses, we want to make sure that those policies continue to protect your businesses, particularly if you have inventories or assets that remain at your sites. Making sure that you have ongoing coverage is important for your business, particularly if there are losses. And so if your policies contain vacancy clauses of any kind, we think it's important that you understand if you have one. We think it's important that if you have one, you can work with your insurer to extend the clause or have it held whilst we go through this process. And if you don't have one, validate with comfort that you in fact don't have one. This should be very straightforward for you and your advisor to determine and find out, and we would recommend that take place for your own comfort. With respect to change in use, we also appreciate that there is some pivoting going on with businesses and small businesses across the country. We appreciate that pivoting is part of survival, and we understand that many of you may be contemplating or undertaking changes in your operations that could potentially become essential or important right now. And so we also recognize that some organizations or companies or businesses are taking on an effort to help participate in supporting the frontline fight in the crisis. And so we would just remind you that if there is going to be a material change in the use of your space, that you communicate. If you're going to participate in frontline activity, whether that's participating in medical equipment distribution or potentially testing facilities or otherwise, we want to know about that so that we can make sure that your business is properly protected. This would be considered a material change. So if you are planning to change the use of your business, or if there's materially different things that are going to happen in your business, and as it relates to your use of space or real estate, we want to communicate about this and communicate about it early so that we can ensure to support you. The last thing that I'd like to touch on is the idea of returning to work, which I think a lot of us are getting to the point where we're feeling ready to do so. We certainly support and are interested in doing that, but we want to make sure that it's done responsibly and safely for all people. That being said, there's a few thoughts that we want to leave you with around returning to work. One of the things that we believe is going to be important is communicating to the public or to those that are going to attend your businesses that you are adhering to the government protocols and you are adhering to the requirements of the physical space in which you occupy, and making sure that it is posted and or visible is important. Letting people know that you are open for business, but doing so responsibly, and making sure that you are following the guidelines that are provided by either regulatory bodies or the government will help you in the event that there are problematic circumstances that potentially arise as a result of being open. We appreciate that the virus may continue to perpetuate amongst us whilst we return to work. And so I think taking precaution and following those protocols is important, but also important is making sure that your customers and the public that might be attending are aware of how to interact in your environment. We would also like to make sure that if your employees in returning to work are potentially focused on supporting your business and potentially in what we would call exposure, that you have conversation with your insurers about employers' liability and making sure that your general liability policy has protection for you in the event of employer liability related matters. And we would also suggest that where appropriate, a conversation with the WSIB or equivalent in your jurisdiction take place so that you can address workplace related illness and or sickness that may arise from returning to work. I'm sorry that I don't have more prescriptive details about how to limit your liability as we return to work. I will admit we're in some uncharted territory. But from the above, we hope that this is valuable as you do consider returning to work and as you do consider how to interact with your insurance advisors. And Waleed, I'll continue to press that we would be pleased to have conversations at this point. We are not interested in selling more insurance. We're interested in helping get clarity for those of you that don't have it. And I want to leave that with one opportunity for my colleague Jen to talk to you a little bit about some of the property management related things that you can do in your space to be thinking about. Jen, over to you very quickly.
Thanks, Jeff. So obviously with government shutdowns, most employees are not present on the site, and drastically less foot traffic can pose increased issues from a property loss standpoint. So in order to help mitigate any potential loss, to help protect your assets and business, there are some guidelines which are suggested during this time. So a couple of pointers would be things like securing your buildings and owned vehicles to prevent intentional or accidental damage to property. So limiting site access to authorized and trusted personnel only, securing all potential entrance points to your facility, locking all doors and windows, and if you have a glass exterior, potentially making those windows opaque so passerbys cannot look inside. Also to ensure that all security systems are working. Second would be maintaining good housekeeping measures to reduce fire hazards, so removing any trash and any other unnecessary combustible material from inside and around the building, and ensuring that that material is stored at least 50 feet from the buildings. Third would be making sure fire protection equipment like sprinklers, detectors, and fire extinguishers are working and accessible. And in general, other important things to keep in mind would be storing important records and valuables in vaults and fire rated safes if they must be kept on the premises. Ensuring that any of your product or goods will not spoil and taking any necessary steps to avoid this from happening. And ensuring that your contingency plans are up to date, including updated contact information. So with that said, I think it's an important segue into our final message, with which Jeff has already made a great point of, which is the importance of communication. So we'll lead a final slide. You should reach out to your broker because they could have specific risk mitigation guidelines that your insurer would recommend you implement while your lease space is unoccupied, and can provide you with further help from a risk management perspective. So Jeff, I don't know if you wanted to add anything else there.
No, I think we would just add that we'd like to thank Strathallan for this opportunity. We'd like to extend our heartfelt thoughts to all of you as you persevere. We have great confidence that we will come out stronger and better. And if we can be helpful to any of you through that process, we would be pleased to, and thank you kindly.
Thank you very much. You guys have covered both breadth and depth. Thank you for all your feedback. We have collected a number of frequently asked questions. By the way, thank you, our listeners, for sending these questions to us. You will see these questions on the screen, and we'll have the most appropriate panelist respond to them. So the first question is, what is the status of Canada Emergency Commercial Rent Assistance Program? So we've had a very recent change on this topic in Justin Trudeau's speech today. So I would like to ask our CEO, Carl O'Connor, to share with us the limited information that we have so far. Carl?
Yeah, thank you, Peter. This is an important program. It's called the Canadian Emergency Commercial Rental Assistance Program. It's a mouthful, and it's hot off the press. Last week, the federal government mentioned that they would have a program, and until today at 11 a.m., there was nothing further on the program. And even today, there seems to be just an announcement in the Prime Minister's website about the program, and it's about 2 pages, and I recommend people read it. So it is emergency commercial rental relief for small business. So this only applies to small business, and I'll define that in a second. It provides rental forgiveness for April, May, and June. It applies to small businesses who are experiencing financial hardship, and it amounts to 75% of the rent payable per month, and it's a maximum of $50,000 per month. It doesn't define what the rent is, whether it's gross rent or net rent. It applies to tenants whose sales have decreased by 70% or have closed temporarily due to the virus. So again, not a whole lot of definitions around this yet. They say that it is expected that this program will be operational by mid-May, with commercial property owners lowering the rents of their small businesses who are affected and eligible for this program for the months of April and May retroactively, and for June. So it'll be late May before there will be details sufficient that we will know how to apply this. Of the 75% reduction in rent. The federal and provincial governments will each contribute 25%. The landlord is expected to contribute 25%, and the tenant is expected to contribute 25%. The landlord will administer this program with CHMC, so that's a government agency, and the landlord will be, to get the equivalent payment from the tenant, will have to apply to a government program and get this money as a loan. And once it complies with the conditions of the loan agreement, it will be forgivable over a period of time. So there's a lot of bureaucracy here. So just like the Canada Emergency Wage Subsidy, the Canadian Emergency Commercial Rental Assistance Program is a little bit complex, but looks like it is going to impact tenants who are affected, and will take a little bit of time for everyone to figure out what it is. So what we would do is ask our tenants to stay tuned, to still comply with their lease agreements, to still work with us on rental deferrals. And then once we know more about this program, we will start implementing this across our tenant base to whom it applies.
Okay, thank you, Carl. I know it's we're going as we learn, and thank you for the up-to-date information.
Thank you.
The second question we've received is can I apply for both Canada Emergency Wage Subsidy and Temporary Wage Subsidy? And how is the receipt of these subsidies treated for tax purposes? So I think Aman would be most appropriate, the panelist, to answer that. Aman?
Yeah, certainly, Peter. Yeah, so the answer to that question is yes, you can apply for both programs. But what will happen is that I mean, let's say, for instance, you've applied for the Canada Emergency Wage Subsidy, and you're receiving that subsidy. Your subsidy, under that program, will be reduced for any subsidy you received from the Temporary Wage Subsidy program, and vice versa. So again, yes, you can apply to both, but it's going to have an impact that if you've applied to both, it's going to be reduced for the benefit that you received under the other program. Okay. And how is the receipt of these subsidies treated for tax purposes? They're both seen as government assistance, which means they are taxable. So for clarity, you need to include the receipts in your computation of taxable income, and they'll be subject to income tax.
Okay, thank you very much. The next question is for Chris. How long will it take to apply for the $40,000 loan, and what is the process? Can we go to any bank? Chris? Hello, Chris, are you, maybe can hit unmute?
Can you hear me now?
Yes, we can hear you now.
Excellent. Sorry about that. Okay, so yeah, so the actual application process is actually quite simple. It should take no more than a couple of minutes, as long as you have the information that you need prepared. And really what that is the 15-digit CRA reference number that you'll find on your 2019 T4 summary of remuneration paid statement. Essentially your payroll to make sure that you qualify. The original limits were 50,000 to $1 million. The government then expanded that, reducing the payroll amounts to 20,000, which would essentially capture a much larger audience, and also increased it to 1.5 million. So very good thing. You would have to go to the bank, again, the bank that you were dealing with on March 1st, 2020. So your bank of record on that particular day would guide you. They would either help guide you through online banking, where many of the actual banners and the access to the government program can be found, or alternatively, they would give you a phone number to call, and then they would walk you through that. But again, it has to be your bank of record as of March 1st. What we've seen is that we've been told it takes 5 business days from the date of application to the date of funding, which is exceptionally quick. And in fact, we've seen them happen as fast as 3 business days. So someone's applied on, let's say, April 4th, and they've had funding available to them already by April 7th. So quite quick turnaround time for this particular program, which is nice to see.
And if I don't have a Royal Bank in my neighborhood, can I go somewhere else?
Again, it has to be where your business was dealing with on March 1st. So if you had a business account
Understood.
through BMO or any of the other FIs, that
Okay.
would be the one that you have to go through. It is your specific FI as of March 1st.
Understood. Okay, thank you. Jeff, because people like you so much, and maybe because you have the Strathallan logo behind you, there's a insurance-related question. What conversation should I have with my insurance broker prior to opening my store? And what is the type of insurance I should look out for? I know you touched on it a little bit. If you can dig a little bit deeper.
Yeah, I'd be happy to. I don't know if everyone likes me the way they used to prior to this. I mean, you'll appreciate that the response around the business interruption has created some angst. We're well aware of that, and I think I'll just reiterate, we're trying to help bring clarity, so at least with clarity you can make better decisions. And I'll leave any specific questions about policies for another time. In this instance, when we think about opening the stores, there's a prevailing understanding of common sense that we think applies. So if you're going to open your store to the public and you're going to potentially expose yourself, your employees, others to the ongoing medical exposures, some of which are known and unknown, just take prudent action. Be seen as taking steps that will help prevent spread, ensure that distancing is considered, appreciating that we're going to all want to get back and sell our inventories and create activity for sale. I would also caution that, let's do so responsibly. And so overcrowding stores, overcrowding spaces are things that we want to be just thinking about as we return. And then in terms of insurance that we should be thinking about, your general liability is probably the number one concern, which is property damage or bodily injury that your conducting of business may cause unto others. And so have a conversation with your liability underwriter and your broker, and just have a conversation about what liabilities are you being exposed to in opening your store. My view is that the largest is potentially being associated with anybody who contracts the virus as a result of allegedly attending your space. And that's why we have general liability insurance. So I think it would be a good idea to have that conversation. If you're thinking about product recall, or anything that if you're in the process of selling perishables or these types of things, there may be some value in having a discussion about product recall. But really, I would argue that your number one consideration should be around your general liability.
Appreciate it, Jeff. Thank you. The next question is for Aman. If my business qualifies for the Canada Emergency Wage Subsidy for March, do I need to reapply for the following months? Great question.
Yeah, this is a good question. So if you recall in my presentation that, I made mention of the fact that if you qualify for one period subsidy, you'll automatically qualify for the next, but you do need to reapply. Okay. So again, for clarity there, you would need to reapply. So, I mean, if you qualified for March, you're going to qualify for April, but you still need to, compute your remuneration and, feed that through the application process, because the subsidy, is based on that remuneration. So, the government still needs to know what you remunerated your employees during that, that next period that you automatically qualify for. So yes, you do have to apply for each eligibility period, regardless of whether you've already qualified or not.
Okay, and the last question is an extension of the previous one, and you kind of touched on it. Does eligible remuneration paid to employees that were previously laid off but got rehired qualify for Canada Emergency Wage Subsidy?
Yes. So, the spirit of this legislation, in general is to, help employers retain employees, but also, help employers rehire, employees that were previously laid off. So specifically, let me give you an example. If I talked about, during my presentation that, for remuneration paid to be eligible, for the subsidy to an employee, that employee cannot be without, remuneration for 14 or more consecutive days in that eligibility period. So, in our practice, what a lot of questions I'm getting from my clients are, what if I have laid somebody off in an eligibility period, and because of that layoff, they've been without remuneration for 14 consecutive days. So whatever wages I did pay to them, they wouldn't qualify. But now what if I, call that employee back and I top them up for the period that they were, without remuneration? Would that top up then qualify for the subsidy? And the answer to that question is yes, provided that you've rehired that person and paid them the remuneration before you apply for the subsidy. Okay, so that's kind of how that works.
Thank you, gentlemen. Our time is almost up. Thank you ever so much for your time and insight. This is a very confusing and stressful time for everyone. We really appreciate you coming on this webinar and providing advice and support in these challenging times. The truth is that everybody is thrown off by this and is feeling the pain, and it is reassuring to see that this pain is inspiring people to share and help and stick together. So thank you for your contribution. To our listeners, thank you very much for tuning in. We hope you found this information useful. If you have further questions, please reach out to your existing accountants and lenders and insurance providers. We also hope that you're safe and that when this is all over, you'll be able to reopen your stores in our shopping centers and that your businesses will grow and flourish again. Thank you. Have a great weekend and God bless.
Thank you very much. Bye-bye.